Ollie here from Thirlmere Deacon Property Investment. I just want to talk to you today a little bit about banks and how much cash the banks have available. There is a bit of a theory out there that at the minute that banks have no money, that we're on the brink of a financial crisis. The reality couldn't be more different. So the banks are not in the same position as they were back in the 2008 financial crisis. They learned from that. They have a lot of funds available, and they're much more responsible with their lending. So as an example, a recent report came out. Banks have in savings accounts in excess of £1.7 trillion, of which 200 billion has been added since the start of the pandemic. So there's plenty of money available. Savers have got lots of money. The banks have got lots of money. However, the issue with leaving your money in the bank is, and people are starting to realise this now, is that the interest rates are at record lows. So by leaving your money in the bank, you're earning, if you're lucky, maybe 0.5% interest, up to 1% on longer term fixed rate saving products, which, you think, okay, it's not the end of the world, it's not great. However, if you look into what's happening with inflation, which is over 2%, by leaving your money in the bank, your net worth and your wealth is essentially reducing. It's devaluing. So as an example, when I was a kid, you'd buy a Freddo chocolate bar for 10 pence. So if I held on to that 10 pence from when I was a kid to now, that Freddo chocolate bar is now 25 pence. I couldn't buy that chocolate bar now with the same money. And that's what's happening to your money in the bank. It's losing its buying power. So what savvy investors and savers are actually doing is hedging against inflation by buying property. And with property, you can obviously make money in two ways. Number one is from your rental income. So you could make maybe 5, 6, 7, 8% from your rental income, which obviously is beating inflation. Great. But even if you don't rent the property out, even if you buy a property and it's sat vacant, as long as that property is increasing in value by more than 2.5% a year, i.e. beating inflation, your wealth is not reducing. So you're preserving your wealth, protecting your wealth, protecting your money by buying a property. And there's a great opportunity at the minute. With interest rates at record lows, the opportunity is for borrowers, not savers. So you can lock in a 2-year, 3-year, 5-year fixed rate mortgage, know exactly how much you're going to be paying out, maximize your returns, and really ensure that your wealth is preserved for many years. So if you would like to talk about this in more detail, or talk about property investment, or talk about financing properties, feel free to get in touch with one of our team in London or Dubai, and we'll be happy to help. Thanks.